Hello, everybody, and welcome back to another podcast with Decentralized Dave and Curtis. Hello, Curtis.
Hi, David. How's it going?
I'm pretty fine myself. How about you?
Yeah, good. I'm back in Tokyo. Nice to be back here.
We have not made many podcasts this year, but we feel that today is an excellent time to make one. So, let's start with the updates of the Bitcoin. Curtis,
Yeah,
it's
sure.
your turn.
Yeah, lots to talk about. So last weekend, I think the news came out last Friday that Silicon Valley Bank was going bankrupt, right? And we'd already had Silvergate Bank as well, both crypto banks. So the panic Friday night was, what are they going to do for the Monday open, right? That they someone needed to step in and either buy the company, or there'd be problems on Monday. The Fed came out, I think Sunday, there was a press release, either early Monday morning or Sunday night, from the Fed saying they were going to guarantee all the creditors. All the companies, hundreds of companies, and all their employees would have not made payroll. So long story short, we had a bounce. You can see here, Bitcoin went up to 23, 24, and then carried on to about 26,000 at the high. And this was a combination of factors. But I think the theme of this podcast is that bad news is good news. In other words, because we had a bailout and a bankruptcy, I think the market is saying, look, Jerome Powell cannot raise rates much anymore. So the system is starting to break a little bit, and Fed rate hikes are maybe going to no more, or maybe just a little bit more. So ironically, the bad news triggered a rally in stocks and crypto, that maybe quantitative easing is coming back, and that we're bottoming here. Now, I don't know if that's true. There definitely could be more contagion. But anyways, in the short term, it was bullish for crypto. You can see here. I tweeted that, perhaps finally, after many, many years, people will start seeing Bitcoin as a flight to safety, right? So we've also seen Bitcoin decorrelate from stocks, modestly at least. And this was just a 2-day move, but Bitcoin doesn't have any counterparty risk, right? Whereas your money in a bank account, if it's not FDIC insured, you can lose it all, right? So I don't know, but I think it's a bullish 2-day event. Let's call it that.
Interesting that you say about the decorrelation, because this is the phase video that I've made.
Right, decoupling.
10 days ago,
yeah,
it was 6th of March, and I was talking about the decoupling incoming in
right.
March.
Yeah.
And yes, I guess it's my turn to update you. So I encourage you people to have a look at our podcasts from November last year. Mind you that we did like 2 podcasts in this area at the second half of November, when everybody was bearish, and also most of us, because it was also Isabel, most of us were bearish, and also the viewers that were commenting on the video were bearish. However, I started talking about something, and I was afraid to speak it out as well, because quote unquote, I said that it looks too good to be true. And I was talking multiple times in the previous podcast on the descending wedge.
Yeah.
And on my opinion that it's going to break upwards. Break upwards means above this line. Wick is the break, so we can say technically that is now done. So I was actually right.
Yeah.
Even though I was, again, I was too afraid to say it, because it was just, remember that when we were at 15, 16K, and there was so much contagion, or the FTX situation looked so bad, that I was it just felt too good to be true to say that it's 28K next, or 29 or 30K. But I was still talking about it nonetheless, but I was debating that maybe it's going to happen later or whatnot. Now the break upwards happened. Also my FaceTime videos, also I suggest that you could have a look at them. Now, what's now when the break upwards has been technically done, it's just a week. It's not even a close, not even on daily, so more
Yeah.
so not on weekly. So now what's the situation is? So, well, that I would like to derive from a couple of factors, and mainly two that I like to follow. So first of all is the over leveraging indicator. So again, this is I often show this on my in my videos, in my podcasts, so that those of you who watch it, you know that this blue line down here is open interest / market cap ratio, and this is how I measure. With this number, I measure how much over leveraged the retail, most of all, is. So if this ratio is high, it means that they are over leveraged a lot. That can mean
Right.
one way or another way, short or long. Most of the time it's long, but there is occasionally a situation when there is also quite some short leverage, which was the case at the end of December last year. This was indeed a short squeeze at the beginning of the January.
Right.
And the over leveraging indicator is actually good. 1.58 is not that small if you compare it to 2021. It's not small at all, but it's small comparing it to this year or the last year, because the last time we had 1.58, it wasn't, yeah, it's still even lower than it was at the beginning of the January. It's still lower than it was the second half of the previous year. Like, we have not had this low number over leveraging since May or April, May 2022. That was quite some time. It's soon going to be 1 year. So this looks really good. There's not that much leverage, not comparing to this year at least. So second positive news is this beautiful spike of the funding, negative funding fees. I also tweeted it because I too was scared, like it was necessary to be scared when we were 19.5K just a few days ago. But then when I saw this spike, I also tweeted something like cavalry has arrived or something like that. And it looks like I also hit the nail there. And also this spike also reminds me the November situation, and also the whole situation with the bank really reminds me the November situation from the last year. And the second factor that I would like to mention that I look every now and then are the moving averages. The moving averages, of course, you have to be careful because everybody's looking at them. But you can play with the fact that you can expect the market to try to play the people. So we had touch of 20 moving average. We had break the 20 week moving average in January, and we had a touch there. And that's actually, like, we have not had this for, wow, the last time this happened was September 2021. And before that, it happened in September 2020. Maybe it happened also in the May 2020. Well, I mean, this is, I would say that not only bullish, but it just, again, it looks a little bit too good to be true, because this usually means that this little bullish mood is gonna continue at least for some time, again, for a couple of weeks at least. But the most important, I think, here is the 200 moving average. That's this red line, which has been finally crossed, but again, not closed above. And I think if the market wants to play people again, and I know it wants to, and it will, what is going to happen then next is that we are going to have to close weekly above the 200 weekly moving average, which means above 26K close weekly, maybe even 28K, who knows?
Right.
After that, however, it's still, the fun doesn't end, because after that, I would imagine for the best possible play to close back on the line. So to close around 26K, And that would indeed look the most bullish. To close
Right.
weekly above and close another weekly on the line, from the above, after we broken it. And then that situation, I think that would convince definitely even the remaining people that are not all in would remain them to not only go all in, but then we would see leverage going, and this over leveraging indicator, we would see it going up a lot, and that would indeed be start of the very bearish stuff, not the
Okay,
end
so
of
we're
it.
still in the bear market. It's a bear market rally, is what you're saying, even if it closes above 26K on the weekly.
Depends how you define the bear market, really. But from the usual perspective, how people take the bear market rally, like we're gonna come back down anyway later. Is that what
Okay.
you mean, right? Like
Well,
bear
I don't
market
know.
rally is if.
It's been so November 2021 was the peak at the 69K. So it's
Mhm,
been 12, 13, it's been 16 months since the peak, the all-time high.
mhm.
And then very soon 17 months, and then maybe we get above the 200-week moving average and consolidate above that. It's getting to be a very long bear market from historical standpoint in terms of Bitcoin in the last three bear markets, right? It's getting
Yes.
very long.
Well, now let's move to the S&P 500. Would you like to
Yeah,
comment on that?
sure. So, yeah, we've held this. Well, we're about 3,900. The low was October of last year at around 3,500. Again, stocks rallied a bit with crypto on Monday. They've sold off midweek a little bit. But I think stocks would also be thinking the Fed is done hiking. If we don't have another series of bank failures, we may have a Goldilocks scenario. In other words, we don't have a Lehman shock type environment, and yet the Fed stops raising or even starts cutting. We still have job growth, and then the bottom was indeed last October, and we start building, building higher highs towards the end of the year. That's assuming we don't have any more contagion. Credit Suisse just got a loan from the Swiss government, so there's a lot of potential explosions out there. Again, bad news is good news, because all this means is the governments are coming in to bail people out, and they're going to print money, and they're going to stop raising rates, and the politicians are going to come in and say no more rate hikes, and we want to print money for this and that. So bad news might be good news again, unless it gets so bad that everything starts breaking, and then it's a totally different conversation. In other words, it just gets out of control, and we go into a big recession and job losses and stuff like that. Because January we had 500,000 jobs, and then this month we had 300,000 jobs. So an average of 400,000 jobs per month in the US. That's not a recession. That's a growing economy. Even if the jobs aren't great quality, it's still a lot of people working. Housing still hasn't collapsed. So this is what the S&P is saying here, that we're holding on here.
Yeah, I don't have much to add to that. I do think that the rate hike will not happen after the last credit event. I think this is the credit event that is happening, and I think that it is indeed going to cause the Fed, and I think we are going to learn it soon. I think this month, maybe, who knows, maybe even this week, we're going to learn that there is not going to be any more rate hikes. So
Right. The market,
I agree with you in this.
it's now 60% chance. They bet on the futures, right? It's going to be half a point or 0 or 0.25.
Mm-hmm.
So the bettors are saying a 60% chance there's no rate hike.
Mm-hmm. Okay.
And then a 40% chance of 0.25, but nobody thinks we're getting a 0.5% rate hike. And a
Yeah.
week ago, it would have been a 50% chance. So the bets have totally changed now. So the bettors agree with you that we're probably getting a 0. At worst, we're getting a 0.25. And again, that's why risk assets are rallying.
Okay. I think you want to talk a little bit about gold.
Sure. Yeah.
You also brought
But
us
maybe,
this.
yeah,
Yes.
we could look at gold here.
Yeah.
So I'm just looking back at 2008, and then obviously we had the great financial crisis and Lehman bankruptcy. I'm just sort of trying to zoom back a bit and give people a broader view of gold. You saw that it fell in the crisis, 2008. You can see, if you can put your cursor there, it initially fell. Yeah, right there, it fell off because right in crashes, everything sells off. Gold sells off, Bitcoin sells off. People sell whatever they can because they're getting margin called. They don't have enough money to pay their mortgage. Everyone sells everything. So there's nowhere safe to go. And that could happen later this year where just everything sells off. Bitcoin goes to 10K, gold goes to 1400, whatever. But you'll then have often a V recovery when the government steps in and starts printing again. And look what gold did after it fell off. It went from 850 USD to 1850 in about 2 years. And it peaked in 2011, maybe 1900 there, right? And why is that? So they cut rates down to zero. So your US treasuries went low, US dollar went down, right? Gold is priced in US dollars in this chart, right? So it acts inversely to the DXY, or the value of the US dollar. And also it's a flight to safety. It has no counterparty risk, all of that. So I'm just suggesting in this chart, if you look at today, we've got Silvergate Bank, Silicon Valley Bank, and Signature Bank collapses. We've had a bit of a sell-off already. We could get another one, but let's say over a 2-year period, it may be a good play to go long. And it may go, who knows, 2,700, 3,000 is very possible. I'm not saying this is a prediction, but it's an interesting perspective.
Yeah, it's very, very good that you mentioned the possible 1400, because that's exactly my red line was the profit take from my imaginary short, and I was thinking to short from this green area. That would have been already, I think, stop loss.
Right.
Unless I had a stop loss at the very, very, very top. I did not short it, and I think, yeah, this short is just too hard. As well, with shorts, usually they are extremely hard to catch.
Yeah.
But even if you
So
had a
I think
stop
the
loss
only
this
reason you
high,
get to 1,300 is if we have, again, a massive banking crisis.
and if you short gold right now with a stop loss at the very, very top, well, right now you would actually get 3.6 RR, risk reward, which is actually pretty good. But of course, it's extremely difficult. It goes against your instincts right now to try to short the gold. So of course, but that's the game. It has to be extremely difficult. It has to feel impossible. So that's why you can only do it with a small amounts that you will not really be hurt that much if you are going to get stop loss and lose them. But yes, the short, as I have been thinking about it right now, I can delete this area because this area got broken. If you short gold right now, it would have been 3.6 RR. So that's just, but this is not a financial advice, of course.
Right.
Let's have a look at the US dollar.
Yeah, yes. This is huge. Yeah.
This is huge because again, my line work looks like, wait a second, let me try to have a look at the daily. And daily, it was perfect close on the line. And again, these lines I drew like a year ago, both of them. So back when I was drawing these two lines, we were like here, I had no idea that we are going to be touching them this much, or, you know.
Right. So as if they stop raising rates or they cut rates, it means people are being paid either the same or less to hold US dollars in bonds. So the bid on the US dollar goes down and DXY falls. The reason it rose so much is because rates were rising in 2022, and that's why it rose up. So for your listeners, to understand that the Fed rate greatly impacts the demand for US dollars. People buy the bonds and lock up the US dollars at a high rate of 5-6%. It's very attractive. If the rate is 4 or 3 or 2, it's much less attractive, and the US dollar value falls. When US dollar value falls, gold is getting a bid and risk on. There's less risk-free rate. It's called the risk-free rate. So stocks are more attractive. Bitcoin's more attractive crypto. So it's very likely that the US dollar is going to weaken from here on, or at least stay around the 104 level, but it could go down to the 100 level. And that's good for risk assets, all of the things being equal.
It would be also hilarious from the perspective of my lines, because then it would really look like my lines really like pushed, like stopped the US dollar, like when I stopped.
Yeah,
Like,
you
okay,
did it all by
use
yourself. It looks like
like
you're responsible. So
so
yeah,
let's progress to CPI maybe.
yeah. So this was the second. So we had two big bullish news events this week. One was the bank collapse with the government intervention, which said maybe the Fed's not tightening. And then I think on Wednesday we had the February CPI print at 6%. So we've had 8 consecutive months of lower CPI. The June 2022 was 9.1, and you can see it goes down 1, 2, 3, 4, 5, 8 consecutive. And this from January went from 6.4 to 6. So this was also very bullish. It suggests that inflation might be getting towards 4 or 5% in a couple months. It may even go down to 3% by the end of the year. It takes the pressure off Jerome Powell to raise rates. So we've had two events that let Jerome Powell say, okay, we're going to stop raising rates. That's good for the economy, right? Or good for risk assets. He can say, look, we don't want to break any more banks, and also inflation's coming down. Jobs are okay. So it's that sweet spot. So again, it's a soft landing, perhaps, as long as we don't have any more banks collapse and credit freezes. So again, this is very, very good news for people that are looking for the stock market and for the crypto market to bottom later this year or now.
At the end of our podcast, maybe let's talk a little bit about altcoins, if you don't mind.
Sure, we can go to that.
So would you like to say anything about Ethereum? I know you love altcoins, right?
No, I don't follow the Ethereum chart. I think isn't the unstake, they can unstake it fairly soon. Is that May? And people don't know what'll be done. Will people dump at that point or not?
Well,
and they're doing some sort of upgrade, isn't that right?
but that I know, there is some sort of upgrade that is now running on testnet, and it might be online in April, or come online on April.
Yeah.
But yeah, I agree with you that later, if that happens in May, if a lot of ETH becomes available, then of course market is going to account for like the supply increased. So the price of the individual token, I think it's going to be it's going to momentarily fall. But that's now too ahead of time. Like let's now do step by step. And what I wanted to point out is that the dominance went up when the Bitcoin went up, and that's yet another very bullish
This is
sign.
Oh, I didn't know that. Bitcoin dominance at 45%.
Bitcoin dominance is at 45%,
Wow.
and
Is that including stable coins?
Including stablecoins, yes, that's right. It also happened, right here in September and October 2021. And it also happened, well, before that. We can go to the history. So my point is that when you see Bitcoin dominance going up this much, and it's because the Bitcoin went up, it's actually, I think that it's gonna be now a good time for altcoins. And maybe the last but not least, let's have a look at the moving averages of Ethereum. So when I start, I have 3 moving averages here. So, oh my gosh, this is just hilarious. Wow. Again, this is a good time for altcoins, guys. Oh my God. Because, so this blue line is 50 week moving average. As you can see, it was a resistance in February. Also, I'm going to delete this area. This area worked perfectly. Okay, this area got visited. Also, I'm going to delete this line so it doesn't disturb your view. But we had a touch of 2 lines, and that's 20 week moving average and 200 week moving average. So if we all know how important 200 week moving average is, and we came back already with Ethereum, tested it, and I think that After that, it's going to and not only that, we also tested it and walked it on a 20-week moving average. So
Right. So good time to buy Ethereum, you think?
I think that Ethereum, also coupled with the incoming upgrade, I think it's going to, yes, Ethereum has not yet broken the descending wedge. So to answer your question, yes, I think that Ethereum's price is going to break 2000
Okay.
in the upcoming, I don't know when, but next, okay, let's say next. Let's not say in upcoming weeks, but let's just say next. And yeah, that is also going to coincide with the touching of the 200 moving average, 20 moving average. And right now, I think the last moving average that needs to be tested, and that needs to turn into support is the 50 big moving average, and that's happening at the very moment.
Again, it's looking like we're bottoming. We're getting, the bear market's getting longer and longer. The price action is consolidating and turning upwards. It's been 16 months since the peak. We've had tons of bad news. Had a lot of pain. We've had a big sell-off, about 80% in Bitcoin and Ethereum. So a lot of factors. The list is getting longer and longer that the bear market has bottomed and is getting old. You don't seem too willing to make that call.
No, not yet, because I try to go step by step, and what I can see, the next step for Ethereum is still due to break the descending wedge from the last year. So the next step that I can just say for Ethereum, that the price needs to break 2000. And for Bitcoin, I think Bitcoin is now less bullish than Ethereum, than altcoins are.
We didn't talk about the USDC peg breaking.
Oh yes, maybe we can just mention it last time. So this is the
Massive news.
USDC USDT, and yes, I was
Crazy.
watching it closely. I was watching it very closely because, well, first of all, I did not have any USDCs because I did think that the risk for USDCs was greater than USDT, than the Tether, because it was very contrarian to what most of the people believed. And that's, as for those of you who know me a little bit, that's number one reason why I go and start think it, when I see that most of the people think the opposite. What I really got shocked by was that the day my favorite stablecoin, DAI, DAI, it followed the suit because it had lots of USDCs as reserves.
Yeah, it was 30% cross collateralized.
So that was the biggest shocker to me, and I was very worried about my favorite stablecoin, but it recovered as well, and I think it's not going to make the same mistake. I think DAI is now safer than it was, and I think that the next time when I want to go to altcoins, I think I'm gonna go into DAI.
You mean stable coins?
When I want to go into stablecoins, I think I'm gonna go into DAI. Yes, I think it's now risk off.
So that was, USDC was supposed to be the safe one, and it turns out it wasn't.
That's what the majority believed, but not.
They had about $3.3 billion in Silicon Valley Bank, but now the money was guaranteed, and they're going to move it to, I think it's New York Mellon. They're going to move that money to a larger bank that's safer. So we'll see. But yeah, it's almost everything bad that could have happened has happened, right, in the last year and a half.
Let's see what happens next. Let's see. We will definitely try to be here for you, and we will try to do the podcasts again more often. I have less time. I'm more tight on the schedule, but again, it doesn't mean that I can't find a time like once every 2 weeks or so.
Thanks for today, David. On my channel, Gresham's Law, I'm going to do a longer form macro view of, a macro update and then a crypto update. So I'll do 2 new videos this month. So anyone who's interested, look at a link below. And
definitely check him out, yes.
That's great. Thanks a lot, David.